This explainer video provides an overview of describing nonprofit organizations and defining a reporting entity, as described in International Nonprofit Accounting Guidance, Exposure Draft 1. This is important for everyone who has an interest in the financial reporting of nonprofit organizations. To develop INPAG, we needed a clear description of what is meant by an NPO, so we could consider the needs of those NPOs and their stakeholders. INPAG takes a descriptive approach, based on broad characteristics. For the purposes of INPAG, to be an NPO, an entity will have all of the following broad characteristics. Firstly, NPOs have a primary objective of providing a benefit to the public, and deliver services and goods to the public in pursuit of their purpose. For some NPOs, the public that benefits will be all of the general public, but it does not have to be every member of the public. For other NPOs, the public that benefits could be a smaller group, such as a particular community, or even members of the NPO. This means that there can be limits to who benefits from the activities of the organization. To be an NPO, any private benefits that this smaller group receives, such as a discounted price for services and goods, must be incidental to the NPO's primary objective of providing a benefit to the public. Secondly, NPOs direct surpluses for the benefit of the public. Where an NPO generates a financial surplus from its activities, these surpluses are to be used to deliver its primary objective of providing a benefit to the public. Surpluses can, for example, be used to fund future programs. The key point is that they are not distributed for private benefit. Entities that distribute surpluses for private benefit through dividends or similar payments are likely to be operating for profit, and should apply private sector financial reporting standards. And thirdly, NPOs are not government or public sector entities that should prepare general-purpose financial reports under public sector financial reporting standards. Government and public sector organizations also exist primarily to benefit the public, but have other characteristics that are different to NPOs. These include the importance of being funded by taxation, having budgets approved by legislative bodies, and having powers that can only be exercised with government authority. INPAG is not designed to provide guidance for these kinds of organizations. In many cases, it will require the application of judgment to decide if the broad characteristics have been met. In some cases, such as membership organizations, it may be particularly difficult to assess the primary objective of providing a benefit to the public. For example, consider a sports club that has been established as a membership organization. The primary objective of the club is to promote physical activity and well-being among a community with limited financial resources, and little access to other sporting facilities. Membership is restricted to local residents, who pay a nominal fee per year. Even though the public that benefits is restricted to a defined group, and they will receive some incidental private benefits, the broad characteristic of providing a benefit to the public would, in this case, be met. In these more difficult cases, INPAG provides indicators that can assist with these judgments. These are: an absence of individuals with rights to financial returns from surpluses, a requirement to transfer residual net assets upon dissolution to an entity with similar purpose, receiving or providing voluntary funding, and holding and using assets for the benefit of the public. The implementation guidance that is part of INPAG contains examples of how the characteristics and indicators can be used in making judgments about whether an entity is an NPO. Now we have described what an NPO is for the purposes of INPAG, we can look at what makes an NPO a reporting entity. The reporting NPO is one that is required to or chooses to prepare general-purpose financial reports. General-purpose financial reports are financial statements with supporting financial and non-financial information that are prepared for a specified period of time, the reporting period. The objective of general-purpose financial reports is to provide information about the NPO that is useful to the primary users of the NPO financial reports, for accountability and decision-making. General-purpose financial reports are distinct from special-purpose reports, which may be produced for a single individual user, such as a donor. General-purpose financial reports have to be prepared to present the reporting NPO as a single economic entity, or other complete set of activities related to its purposes. This means that a general-purpose financial report needs to bring together all of the activities of the NPO in a single, coherent and comprehensive form that follows the relevant financial reporting standards. Where the NPO is a single legal entity, it will be easier to determine if an NPO is a reporting NPO. However, it can be more challenging if the reporting NPO is not a single legal entity, or has complex arrangements with other entities relating to finances, operations, or administration. Identifying the reporting NPO can be difficult in the following situations. Where organizational structures are complex or hard to define, the potential reporting entity is part of a legal entity, or the potential reporting entity is a combination of two or more legal entities. Complexities may also arise from the existence of branches, which we will consider later. INPAG has implementation guidance that considers some typical kinds of structures, and provides examples to assist in making determinations on the reporting boundary, in other words, where the line around the reporting NPO is drawn. Where there are significant difficulties in identifying the reporting NPO, the boundary can also be determined by considering the primary users of any information that an NPO might produce. To do this, it is necessary to assess the existence of a distinct group of primary users in the first place, and if they do exist, to consider their information needs. The primary users of a reporting NPO's general-purpose financial reports will include the following three groups: members of the public to whom the NPO provides services and goods, providers of resources to the NPO, and those fulfilling oversight functions on their behalf. In determining if such users do exist, it can be useful to consider the following factors. Whether management is acting on behalf of others who are providing resources to the NPO. The impact of the NPO's activities on the public, and the financial characteristics of the NPO, including the amount of incoming resources and debt, and the value of assets owned or used. Information should be provided to these users for accountability and decision-making purposes. When the boundary of a reporting NPO is assessed based on the existence and information needs of users, it is essential that the resulting general-purpose financial reports do not contain an arbitrary set of economic or other information that is incomplete. Equally, the general-purpose financial report should result in the faithful representation of information for the users, that is to say, the information must not be manipulated to provide a partial view. Where NPOs operate through a system of branches, this can present a specific issue when considering which activities to include within the reporting NPO. Branches are arrangements that can help with the administration of the NPO. For example, the operating structure of an NPO can be arranged according to factors such as function or location. Branches may include supporters groups, members groups, or offices in different locations. They may operate nationally or internationally. A branch may be subject to national regulations that require it to produce its own general-purpose financial report. Even where this is the case, INPAG requires a reporting NPO to consider its relationship with the branch for financial reporting purposes. This is because the activities of a branch may need to be included or consolidated into the general-purpose financial report of the parent NPO. Where this is the case, INPAG refers to such branches as internal branches. INPAG includes examples of indicators that signify an operational structure as an internal branch. The indicators of an internal branch include the following. It is not a separate legal structure. It is not required to produce separate general-purpose financial reports. It uses the name of the reporting NPO in its title, its letterheads, on its website, or as part of its publicity. It raises funds solely for the reporting NPO. It presents itself to the public as a local or other form of representative of the reporting NPO. Or it receives financial and administrative support, instruction and advice from the reporting NPO. Consideration of these indicators will require judgment. Displaying just one of the indicators may not be sufficient, but in combination with another, might lead the entity to decide that it is an internal branch of a reporting NPO. There are illustrative examples in the implementation guidance. We have so far looked at the specific requirement to include the activities of an internal branch in the general-purpose financial report of the reporting NPO. INPAG also requires the wider consideration of whether a reporting NPO controls other entities. Why is control important in the context of financial reporting? Control is important because it usually requires a controlling entity to present consolidated financial statements that show financial information about the group of entities, as if they are a single entity. NPOs may want to control other entities, which could be either non-profit or for-profit in nature. NPOs may have a variety of reasons for wanting this control. It could be to provide services or goods to the public, to create trading entities, or investment to generate a surplus to support its wider activities. If an NPO controls another entity, INPAG defines that NPO as a controlling NPO. The entity which is subject to control is defined as a controlled entity. For control to exist, a controlling NPO must have power over the other entity, rights to variable returns from its involvement with the other entity, and the ability to use its power over the other entity to affect the amount of the controlling NPO's returns. These are the key principles in INPAG. We will take a closer look at the concepts of power and returns, in the context of NPOs. An NPO has power over another entity, when the NPO has existing rights, that give it the current ability, to direct the relevant activities of the entity, that affect returns. Rights may come from owning the majority of the shares in the entity, particularly if it is a private sector entity, or has been established to carry out a specific task for an NPO. For example, an NPO may set up a separate entity to raise funds on its behalf. Rights may arise from having power over the majority of the voting rights. This could come from an agreement or board membership. This may be more typical where the controlled entity is itself an NPO and doesn't have shares. Rights may also come from a contract or other agreement. To be an existing right, the NPO must have the right, for part or all of a reporting period. Note that the NPO does not need to have exercised the right, it must just exist. For example, the controlling NPO could have the majority of the voting rights, but never vote. Having these rights would provide power. That power could be exercised by the controlling NPO in a number of ways. It could direct the policies of the governing body of another entity. It could significantly amend or veto service or capital budgets relating to the relevant activities of another entity, or it could direct the transactions or relevant activities of another entity. Power may come from one right, a combination of rights, or rights which when taken together with other factors, give that NPO the ability to direct another entity. What is meant by relevant activities? Relevant activities could include selling and purchasing of services or goods. For example, a controlling NPO may determine which suppliers another entity is permitted to use. Selecting, acquiring or disposing of assets. For example, the controlling NPO could authorize the disposal of buildings in one location, to enable the purchase of buildings in another location that support its own activities. Providing services in line with the controlling NPO's objectives. For example, an NPO may determine to whom and under what circumstance another entity can provide humanitarian aid. And fundraising. The description of relevant activities will be specific to the relationship between two entities. Again, judgment will be needed. Each NPO will need to assess whether the rights it has can impact activities of the other entity that are relevant to that entity's mission, purpose or objectives. For control to exist, the existence and exercise of rights must be on a continuing basis. Limited rights to direct the use of funds, such as restrictions on the use of grants, may not be sufficient for power to exist, because they relate to only one aspect of the other entity's purposes and activities. Power from the existence and exercise of rights is an important element of control. But to meet the definition of control for INPAG purposes, there must also be a return or benefit that can vary either up or down. The controlling NPO would be impacted by the return or benefit, either positively or negatively. The common interpretation of the term return relates to financial return, such as the transfer of profits. However, financial returns are likely to be less relevant to many NPOs, where relationships with other entities are often established as part of a social investment to deliver its own objectives. According to INPAG's concepts and pervasive principles, returns and benefits do not have to be financial. There can also be non-financial returns, such as contributing to the purposes of the controlling NPO. For example, let's consider an NPO with the purpose of improving women's lives. It controls another entity that has been set up to provide specific vocational skills training for the women supported by the controlling NPO. The return or benefit to the controlling NPO could be higher employment potential attainment by these women. This would contribute to the purpose of the controlling NPO. As with power, the exposure to returns must be continuous. A one-off event or activity will generally not provide for an ongoing beneficial return that is sufficient for the reporting NPO to be said to be continually involved with the other entity. Control arises only where power is used to directly benefit a reporting NPO. The returns need to be linked to the power. Either power on its own, or returns on their own, are not sufficient to meet the definition of control. So if an entity is getting a benefit from its work with another entity, and it doesn't have power over that entity, then it cannot control it. There is no control relationship in situations where an NPO has a voluntary collaboration agreement with another entity, or there is a coincidence of activities with another entity. To help in applying the control principles, INPAG includes a rebuttable presumption. This is intended to simplify the application of the control principles. The rebuttable presumption automatically presumes that control exists in a number of defined circumstances. However, if it is clear in a particular circumstance that the presumption is not true, then the presumption can be rebutted or refuted. INPAG presumes that control exists when the reporting NPO owns, directly or indirectly through controlled entities, the majority of the voting rights of another entity. This can be easily applied when the other entity has shares. But NPOs may often have relationships with entities that do not have shares. INPAG therefore makes assumptions about control over voting rights. The intent is to simplify the application of the control principles in a way that works for the majority of NPOs. INPAG presumes that control exists, even when the NPO has less than half of the voting rights, in any of the following cases. It has power over more than half of the voting rights, by virtue of an agreement with other holders of voting rights. It has power to govern the financial and operating policies of the entity under a statute, as a consequence of a contract or other agreement. It has power to appoint or remove the majority of the members of the board of directors or equivalent governing body, where the board or body controls the entity. Or it has power to cast the majority of votes at meetings of the board, or equivalent, where the board controls the entity. As noted earlier, the concept of control is important, because it usually requires a controlling entity to present consolidated financial statements that show financial information about the group of entities, as if they are a single entity. INPAG provides presentation guidance on 3 areas related to consolidation. This guidance is drawn primarily from the IFRS 4 SMEs accounting standard. Firstly, the presentation of consolidated financial statements. Secondly, the presentation of separate financial statements where controlled entities are not consolidated. And thirdly, combined financial statements, which are a single set of statements for entities under common control. Having said that, the topic of consolidation is not within the scope of this stage of INPAG development, and so has not been considered in detail. In exceptional cases, a controlled entity should not be consolidated into the financial statements of the reporting NPO. INPAG provides new guidance to determine use of this exception, based on the application of the concepts of faithful representation and relevance. This explainer video has provided an overview of the most important aspects of INPAG, related to the reporting NPO. It has highlighted what an NPO is, for the purposes of INPAG, and examined how this relates to the reporting NPO. Ultimately, decisions on which NPOs are to use INPAG will be made by regulators and standard setters in individual countries or jurisdictions. Having a clear description of NPOs and how this relates to the reporting NPO will assist them in making their decisions. We covered issues relating to the identification of the reporting NPO, including when to look to the existence and needs of primary users, and the specific issues caused when an NPO operates through branches. We considered the requirement to determine whether an NPO controls other entities, through the review of power and its links to returns. This included the rebuttable presumption of control included in INPAG, to assist in applying control principles. Finally, we briefly covered consolidation, noting that detailed consideration of NPO-specific issues are not within scope for this stage of INPAG development. To respond, visit www.ifr4npo.org/have your say. Download a template response document, and upload your completed response or comment letter. Responses must be in English. The deadline is the 31st of March 2023.